Hey there, investors. Did you feel that? That was quite a shakeup, wasn't it? The ground shook a little in the stock market last week, sending ripples of uncertainty through the financial world. Our beloved Nike, the king of sneakers and sportswear, took a tumble. Yes, you heard it right. The iconic swoosh took a hit, and investors are feeling the pressure. It's a tough pill to swallow for many, but hold your horses before you hit the panic button. Market volatility is part and parcel of investing. Let's unpack this situation, shall we? Understanding the reasons behind the dip is crucial. Remember, every dip is a buying opportunity for someone. Savvy investors know this well, but is it the right move for you? That's the million-dollar question. To figure that out, we need to look beyond the headlines and delve into what's really going on with Nike. Analyzing the fundamentals and market conditions can provide a clearer picture. First things first, let's talk about Nike's brand power. This isn't some fly-by-night company. Nike is a global icon. For decades, it has dominated the athletic apparel and footwear industry. From Michael Jordan to Serena Williams, the biggest names in sports have sported the swoosh. Nike's reach extends far beyond professional athletes. It's a lifestyle brand. People everywhere, from all walks of life, rock Nike gear. That kind of brand recognition is invaluable. It's a testament to Nike's quality, marketing genius, and its ability to connect with consumers on an emotional level. So, why the sudden stock slump? Well, Nike's recent earnings report wasn't exactly a slam dunk. The numbers fell short of Wall Street's expectations. Plus, the company issued a cautious outlook for the coming quarters. The reasons? A cocktail of global economic uncertainty, supply chain hiccups, and the ever-present threat of inflation. These factors have put pressure on businesses across the board, and even giants like Nike aren't immune. Now, before you write off Nike, let's consider the bigger picture. Nike has been a dominant player in the sportswear industry for decades, and their journey is far from over. This isn't the first time Nike has faced challenges, and it certainly won't be the last. The company has weathered economic downturns, competitive pressures, and even global crises. But here's the thing, Nike has a knack for bouncing back. Their ability to adapt and innovate has always been their strength. Think about it. Nike has a fiercely loyal customer base, a track record of innovation, and a global reach that's the envy of its competitors. Their brand is synonymous with quality and performance. They are constantly evolving, pushing the boundaries with new product lines and technologies. From sustainable materials to cutting-edge designs, Nike is always at the forefront of innovation. From their revolutionary fly-knit technology to their expansion into the metaverse, Nike is always looking ahead. They are not just a sportswear company, they are a tech-driven powerhouse ready to embrace the future. Okay, I know what you're thinking. You're making it sound like a slam dunk. But what about the risks? You're right, no investment is without risk. The athletic apparel market is more crowded than ever. Competition is fierce. Then there's the economic climate. Inflation is eating into everyone's wallets, and a potential recession could put a damper on consumer spending. And let's not forget about those pesky supply chain issues. They're like a headache that just won't quit. Let's take a quick look at the chart now. Nike is down almost 20% from its $94 range. Now Nike is at mid-70s, which makes this appealing to many. This is a great dip buying spot for investors. So, what's my take on all of this? Well, it's a bit nuanced. Look, I'm a long-term investor. I don't get swayed easily by short-term market fluctuations. I see this dip as a potential buying opportunity, but it's important to tread carefully. But remember, I'm not giving financial advice here. This is just my personal perspective. This is just my personal strategy, based on my own research and risk tolerance. I'm a big believer in Nike's brand power and its ability to innovate. Their track record speaks volumes, but I'm also a realist. I understand that no investment is without its risks. I know there are risks involved, especially in a volatile market like this. That's why I'm taking a measured approach. It's all about balance and patience. I'm not going all in at once. Instead, I'm pacing my investments. I'm looking to gradually build a position in Nike over time, assessing the market as I go, taking advantage of any further dips in the stock price. This way, I can mitigate risks and maximize potential gains. Research is your best asset. The bottom line is this: Nike's recent stock drop is a wake-up call. It's a reminder that even the biggest and best companies aren't immune to market forces, but it's also an opportunity to buy into a quality company at a potentially discounted price. Before you make any decisions, do your homework. Read up on Nike's financials, check out their latest earnings call transcript, and consider the risks and potential rewards. I wanted to thank everyone for the recent support, and remember to like the video and subscribe for more videos like this.